Welcome back for another top-notch video. This week, guys, we're talking about the end of July starting into August. For that first half of the month, let's talk about our TSP and Stockley review. If you guys have a TSP, a Roth IRA, a brokerage account, and you're interested in making money in those accounts, compounding interest, this channel is for you. We do that by talking about certain funds for our TSP folks or ETFs for our brokerage folks. So we talk about the S&P 500, which is represented by IVV or the C fund, the S fund or the VXF, which is the Dow Jones, the international markets, which is the I fund for TSP folks, or EFA for those that have brokerage accounts or Roth IRAs, and bonds, of course, the F fund or AGG. So what we like to do is kind of go over a general overcap of the week. So just kind of some of the news and events that we were looking at in regards to what we had. So for this week, some things that we had going on is we saw some up and down for the most part. Apple ended up hitting $1 trillion market cap, so that was very interesting. This is all from TSP Talk, a guy named Tom that does some comments. We just like to look over a couple of things that he says. Another thing that I found was really interesting is we had a Fed meeting, but they didn't really change any of the rates. They have another meeting in September. We'll see what ends up happening with that. For TSP folks, really interesting note that the G fund is currently going to be hitting a 3% rate for the first time since 2008. The last time it hit, since it's since it's always going to continue to grow. We know that for this year it's going to hit about 3%, which we haven't seen that since 2008. So if you're thinking about taking loans out of your TSP, I would really recommend against that since the interest rate is higher now. So just keep that in mind. For general overview for the S&P 500 or IVV ETF, we did see it come back and hit that 20-day moving average, and we saw it bounce up just a little bit on Friday. They're mostly concerned about this gap on TSP Talk. I don't think it'll come back down here just for the fact that they usually fill, the charts always usually fill open gaps. But since we're above a kind of a critical level, which is the 2780 line, I don't think we can see that. I don't know if we'll see that come back down. We are in the trading range, so it's possible, but it's going to have to work against those trading moving averages, and that's just one extra battle before it goes lower versus higher. And we'll show you that on the charts. Moving down past that, our S fund, that we had that cup and handle look, and we ended up bouncing off our 50-day moving averages, and we just don't know where that'll go from here. The charts still don't look intimate, like the review that we do doesn't look all that great, but I'll go into more details about that. The I fund, as we know it's kind of in a bear market. We saw this head and shoulders here. We got a shoulder, head, and another shoulder, and then we saw that drop. We know because it's fighting against these moving averages and a lot of other things, we were kind of very concerned of it coming up and hitting this 200-day moving average. We did see we were in the S fund, and we did see an advantage to go into the I fund just for the end of the year to try and get this little rally why the S fund was going before we hit this drop, and we actually timed it pretty perfectly on this channel. I'm actually pretty impressed. I would say we got more lucky than anything else. We did those moves around the 1st of August. We ended up moving funds back from the I fund and going back into the C and S fund, so we ended up going back 70 C and 30% S. We labeled that on our Facebook accounts and our Twitter accounts, as you can see. If you guys want to get our moves daily, you can follow us on those channels. And in regards to that, one thing that was really interesting, and I'll show this to you guys. So as you can see, this is from my TSP account, a Roth IRA, folks. Just bear with us for a minute. We made that move on the 23rd into the I fund, 23rd of July, and we ended up moving it back on the 1st. And this is the reason why we actively manage our account, because I just want to show you what exactly happened in regards to that. So as you can see, we ended up moving from like I said, the 23rd of July to the 1st of August. And as you can see, the returns here, if we just stayed in the S fund, we would have taken almost a 1.5% hit off our S fund, whereas we were in that I fund for just that little bit of time, and we ended up gaining almost 0.75%. So huge difference there. Big difference. And we ended up, you'll see in our videos or our charts later on that we ended up gaining a lot on that S fund where we were a little bit behind. So I'll show that a little bit later on. So that was really beneficial to us with the funds. Moving on, let's move back to TSP talk. We'll last talk about the AGG or the F fund. And once again, this is Tom from TSP Talk that does this. We saw he's pointing out a bear flag here, and this fund just continues to move lower. Another fund that we're just not really interested in at this time. So that's kind of everything with that. Let's go into our returns. So with our returns, what we had basically is for the week we had a positive week for basically our funds, our CNS funds, which we were at since August 1st. So since the beginning of this week, pretty much we didn't, Tuesday and Wednesday were not, but and we saw a very negative outcome after Tuesday with the I fund. Thank goodness we ended up switching on that very first day, and we ended up making a positive return here. As you can see, our leading fund is still the S fund. It's still sitting at 8.75%, which is pretty good. If we pull up our TSP returns for the year for Top Notch, you can see that we did end up gaining on that fund. So where we are at for the year, I'll just pull it up like this, 1 second. So this is the month of August. We're sitting at about 0.5% already. Seeing some really good returns for the last couple of months, but we're sitting at 8.63% return rate for us. And if you take out some of the factors with fees and whatnot, really 9.82%, which is great for, that's the monthly chart, but the yearly chart points out to 8.63. If we look at the yearly chart here, as you can see, they're sitting at 8.75. So we're really closing that distance. We are right out hot on the heels of the S fund, almost 8 months into the year, and we are above all other funds right now. We're just lagging that one fund. Hopefully we can find a spot in the future to catch it, but that's pretty good. And I'll show you my allocation later of where we're sitting. So I'm pretty impressed with that. I'm just going to go over some very general chart analysis things real quick with you. With that being said, so one of the interesting things that people talk about is this this bull market ending. One of the other signs we like to point to, and these charts are from Shivako Capital channel, is they like to talk about ADX. ADX is this black line down here, and these other two are movement directional systems, okay? And so one of the big indicators that they've seen is when ADX falls below these other two indicators, we tend to see a new trend forming. The last time we really saw this was back in the early 90s. As you can see, we were below one of the lines, and we had an uptrend with that black line, and we had an extreme uptrend with our charts, which was very, very good for the most part. Now we're starting to see that again. We are seeing the black line start to rise again, and it's below both these lines, and we also had a breakout from our box. This box basically takes the lowest low we had and draws a box around the highest high that we had. And I think people are going to be calling this the lost decade for a very long period of time, because from 01 to 2011, 2012, really, we just had a whole decade of consolidation with our charts. And so as you can see, we're slowly breaking out of that, and people are wondering, well, the charts are going to go down, see these articles out there, but really I think this is a really good positive sign for trends to come in the future for staying invested in equities. And like it says, when ADX rallies from below both red and green, it shows that the market is waking up from like a lull and whatnot. Black's ADX rises 4 steps, let's say 9 to 13, which we saw it rise here. You can see these numbers here, 10 to 16. So it rose 4 steps, or 4 different placeholders. It rings a bell on a new trend, and that's showing from our box here. So from all this consolidation that we saw for years and years, I think that we can basically say that we're seeing a new trend forming in 17 and 18. And I'll go even farther. This was back, not even what we saw. I'll scroll forward just a little bit. As you can see, this is today, and that black ADX rise is continuing to rise, and it is now above red. We're hoping eventually to get above green, but this trend is continuing to move outside that box. So that is really good. Another really interesting thing is you have a reverse head and shoulders effect here. So this is your right shoulder, your head, and your left shoulder, and you always want to see a lower, shallower shoulder here. And that's typically that trend is typically seen as a bullish trend. So that is something really good. As you can see, in the early 1990s, 2000s, we had some early adopters saying something's wrong with the market. People were getting out. And then we had the crowd when we hit this very bottom here. If you would have put money back here in 1995, it would have been the same without adding anything to it. It would have been the exact same price, mid 2008, almost 2009. And then you have your late adopters. But that's a perfect reversal of head and shoulders, so that's kind of good. This trend lasted for, this consolidation, you could say, or this in this box lasted for a total of 23 years, guys. That is pretty much every investor that has ever been in the market. And usually people get very skeptical when they see markets like this for such a long period of time. They're very prone to put their money into equities or funds because in the past, what they've known from a short history is major, very concerning times for these periods. But I think with this new trend with ADX going up, we're not going to see that like we've seen in the past. I think we're going to see something much better than that, and probability points to something much better than that. Like it says, we've seen this movie before. We're not going to be fooled again. So people are holding their money on the sidelines possibly, and they could be missing out on something very big. And this chart just goes to show you that in 1995, if you were 7 or 55 years old, in 2018 you would have been 30 or 78 years old. So basically your whole life, this is all you ever know, pretty much, is this very risky period up and down of people losing money in the markets and not looking like the best investment to be invested in because it just didn't work out for most people. All this consolidation did not fan well for a lot of the big banks and the technology stocks, and people ended up losing a lot of money. So that's all you've heard in the last almost 20 years. So I think that we are going to see a lot different with that, and that's why we've primarily been invested in the S&P 500 and the Dow Jones this year, and it's actually turned out pretty well for us. I mean, we're sitting up 8% for the year. I mean, that's nothing to complain about. So we'll see where that goes moving forward. And if you had any doubts about that, we're also going to look at the moving averages. This is the moving averages back in 2000 and 2008. As you can see, the moving averages tended to be a full bull or like bearish looking effect pretty much, and we just had moving averages. The best moving averages drop below the fastest moving averages drop below the longest moving average, so like your monthly moving averages, and that's always a sign for caution. And basically after this happened, we saw very bad things happen in 2000 and also in 2009. How do those same moving averages look today, guys? Very much different. As you can see, we have all the lines together, not this scrunchious bunch of lines here. We do have the green line moving below it, but not below all the lines like we see here. And we still have our red and blue, which is our 20, 50, and 100-day moving, or 20 and 50 moving day averages, our shortest moving averages, still basically on top. So nothing to really be concerned based on a long-term perspective. So just some interesting takeaways from that. That being said, let's move into our charts for this week. And I think we covered a lot of things there, pretty much broad general overview of the markets, some analysis, and now let's move into the actual funds. So with the actual funds, we have IVV, or the C fund, that is the S&P 500. What did we see this week? We saw some good things happen with this stock this week. Stock is really close to coming to its February high. I think we could really see maybe a new high breakout, especially with some of the other charts that we have for you today. We are quite far away from this bottom trend line now. Tis to say, we have this open gap here, and people think that it possibly could be going back to this open gap at some point here, but we haven't seen that in the charts just yet. So we ended up putting a lot of our allocation after that I fund move into the C fund, and I'll show you that just a little later on. Like I said, we're involved in the C fund right now, or ETF IVV. On the charts, what we're seeing for IVV on a weekly chart, we saw the price rise once again for another very, very good week. We have very good price action ever since the beginning of July for this chart. Very, very strong price action. We have the blue line above the red line, and I don't see any issue for concern right now with the C fund. We are seeing it sink a little bit on the 2-day chart, but I'm confident that it'll probably be a fake out, especially with the 4-hour chart now, blue line above the red line, our first positive bar on the 4-hour and the weekly. Usually the two charts will pull up the middle chart, so we'll wait and see what happens there. But overall, this looks not bad, guys. Not bad at all. Good place to have your funds for the time being in that C fund or ETF IVV. Weekly looks very, very good, positive. Moving on from that, we have VXF. With VXF, we just saw that recent downturn. We ended up hitting our trend line here, and we're moving back up. We are above all the moving averages once again. So we did invest a little bit into this. This chart looks a little more scary than our other charts. As you can see on the weekly, this line is teetering between the red and the blue line for our price percentage oscillator and our moving average. Did see some negative energy, just not ready to move it back into a 50-50 fund just quite yet. We did take advantage of this with our new contributions and with moving funds back into the S fund, and we did get a little bit of an advantage on that. I'm really hoping to see this 2-day chart change over, but it hasn't just yet. And with that, we just cannot buy into this fund fully yet. We did put some money into it, but not a whole lot to capitalize off this small little loss we saw here. So we're really interested to see what will happen with this chart. As you can see on a 4-hour perspective, we are up. So we'll yet to see where that will go. Usually when these Bollinger Bands get really close, we start to see bigger moves. So we have a lot more broadening of the Bollinger Bands. We've got a lot more room to run here on either end. So overall, we'll see what happens. We just did not have as much faith and trust in it as we do with our C fund at this time. Moving on, we have international markets, or EFA. This is going to be your I fund. With the I fund, we did want to capitalize a little bit on what we saw here. We had a lot of open gaps in the back here in June, and we thought it might fill some of those or get very close to the $69 mark based off our upper trend line here. And sure enough, that's exactly what happened. We ended up gapping up here when the S fund was not doing so well, and then had some resistance close to this line here. And because we knew we were in kind of a bear market with this lower highs, we did not want to be stuck in it when it went back down to the bottom of this chart, which could be all the way down to 66. It's a very big trading range. And so we got out somewhere around here, and that ended up being a very good decision for us for that I fund. Like I said, August 1st, we moved back to the C fund and S fund. And that ended up being a really, really good decision for us. We capitalized on that small, quick gain, quick turnaround, and it ended up working out very, very well for us. With the I fund on our charts, I'll bring those up. EFA, we are still good on the weekly chart, but like I said, I just don't like it on that other chart, so I'm just not as convinced with that. And we are starting to lose it on a 2-day chart. Typically when we lose it on a 2-day chart and we're negative on the weekly chart, not positive, we tend to stay out of the fund. So we are not in that fund. We capitalized on this 2-day going up back here on the 23rd of August, and we gained this right about here. And then on the 1st we sold, and sure enough it went down on this on that. I don't think that was based off analysis. I think we had a little bit of luck with that. I'll admit that straight up, but it did work out very well in our favor. And as you can see on a 4-hour chart, we are in the negative. I don't foresee that really coming back just yet, but we'll have to wait and see. So that is EFA, or the I fund for TSP, folks, right there. And last of all, we'll move into bonds. So with bonds, or AGG, still just not looking that good, guys. We have a higher high, lower high, and then a lower high, and just really struggling here. We saw a little bit of that, like we said on the other charts, kind of a bearish flag, and then that bearish flag broke down, and it has not been good for that. We have never really suggested being in bonds. We don't feel very confident about bonds or gold this year for the most part. Both those have pretended to underperform the S&P 500. With bonds, we are coming down off that weekly chart, so we're just not very interested in it. On a 2-day chart, as you can see, we are still very much so in the negative. And even on a 4-hour chart, it looks like we are trying to make our way back, but we have not just quite yet. And really just not interested in that. As you can see, that's where we broke down from last week. So that basically is our charts for the week, guys. As always, you can stay up to date with us on our Facebook or Twitter pages. That's where we make some of our moves. Please like, subscribe, or share this video. It's very important to us that we, or if you have comments, please write them below. Always interested in hearing your guys' thoughts and opinions. What did you think of our iFund move for the month? I'm really curious on your thoughts. Do you think it worked out to our favor? Because we sure thought we did on this channel. And last of all, let's look at our allocation changes for the week. So with our allocation changes, as you can see, we moved most of the funds from that 1st of August position move from the I fund back to the S and C fund. The reason this isn't 66 and 33 is because we had a new contribution to the S fund on the 1st or the 2nd of August, and so that put us 33 and 66 instead of our prior allocation. And so now we're sitting at 33.66. Pretty good position. Instead of putting that money into the C fund, we wanted new monies into the C fund. We wanted to capitalize on the S fund's downturn. So we ended up putting a little bit into that fund, hoping to capitalize on that when that goes back up. I don't know which chart will pull itself back up. Usually VXF and IVV or the CNS fund tend to do the same thing. So they're it's an interesting month with them being indifferent. I think eventually one of those two charts will change to mimic what the other one does. And of course we have EFA kind of in a bear market or not performing very well, but it was good to capitalize it just a little bit last month. And then AGG, which is significantly underperforming all our other funds. So if you guys have any questions, please let me know. Really appreciate you guys' support. And that's another top-notch video. We'll see you guys next time.